Welcome back. This week, inflation and economic growth take center stage with updates on consumer price inflation from China and the US set to be followed by fourth quarter gross domestic product prints from the UK and Eurozone. Naeem Aslam, CIO for Zaye Capital Markets, joins us for a preview of the economic week ahead. Thank you so much for your time, Naeem. So much that is happening. I don't think we can ever really fit all of it into a 7-8 minute conversation. But let's actually start off with those tariffs. A week later, trade tensions have escalated. US President Donald Trump says that he's imposing tariffs on steel and aluminium. Also talking about reciprocal tariffs that he will announce tomorrow or Wednesday. What kind of trade landscape is this creating?
Sure. Thanks for having me as always. Look, I think this particular week, we can easily say that this is going to be the week which is going to be full of headlines of trade war, tariff, and anything in relation to these particular elements. And then that will be very much driving the markets. Now, from the investor's perspective, I think the landscape has shifted a little bit. The reason that I'm saying is because if you look at the European markets today, especially for the stock 600, you can see that they've made another high, a record high. And then the reason for that is because I think now investor and trader community not only becoming immune to these particular trade and tariff war related news, the reason for that is because they know that these are actually tactics to put pressure on the other partner, on the person who's sitting on the other side of the table. And there is no clear defined deadline, even though the deadline could be defined and it could be announced, but doesn't necessarily mean that that would be implied to the market. We've seen that with respect to Mexico, we've seen that with respect to Canada, and then that is exactly what we are looking at into the markets today. Okay, we start with the 25%, let's see what the other party will come back, and then let's see where we meet, if there is a middle ground in between that. And the other thing from investors and traders' perspective is that going into the second season of Trump administration's presidency, everyone was very much anticipating these particular tariffs coming from the United States under the Trump administration. So a lot of traders have positioned themselves in a way that they are very much exposed to the both sides of the trade, meaning where they are going to benefit and where they are not going to benefit. So they are very much widely hedged across those particular companies. So if you have a higher exposure in terms of a country where you had previously no tariffs coming, now you are looking at the US-based companies which can potentially gain from that particular perspective. So I think traders have become a lot more sophisticated in terms of the trading strategies going into 2025, going into the new era of the Trump administration.
Yeah, and we did indeed see stocks of steel and aluminium producers in the US surging today. So quite interesting how investors are positioning themselves in this time. Let's talk about monetary policy as well, because that is still quite a big focus. We do have Fed Chair Jerome Powell testifying in Congress this week. We also have the inflation prints coming out this week, both from a consumer and producer perspective. And of course, we have heard that tariffs may potentially be inflationary. Just considered where we are in the Trump administration, where Trump would like lower interest rates, but that does not seem to be the direction that the Fed is going in. What are we expecting on this front?
So I think you've raised a very interesting point, because with tariffs, we know inflation is going to come baked into that particular equation. So when we are speaking of consumers are already very much pushed into the corner and being beaten down and badly bruised because of higher inflation period. Now you're looking at tariff, and then you're thinking out, okay, now the prices are going to go up. I think one interesting takeaway for investors could be if you look into McDonald's earnings, which came out today, and that they have given a very clear warning in relation to their earnings, that the general public, which goes to McDonald's, their average ticket or the average price that they paid or what they can afford isn't there what it used to be. They're spending less, Why they're spending less? Because of inflation, because of the other expenses that they cannot free up the disposable income. So with this particular situation, again going back to the tariff and inflation, I think we are going to see even more headwinds going further into Q1. Now, of course, that is very much related to the PPI, the producer prices, a certain part of the equation as well, and from the consumer price of the equation, which is going to come out on Wednesday. But let's say, hypothetically speaking, if we do see a reading for the CPI, which is coming on Wednesday, and it does surprise investors and holders to the upside, so then certainly that means less pressure on the Federal Reserve to ease off that monetary policy. And Jerome Powell, who's going to be doing his testimony, he will have a very difficult act to balance this time, because number one, there is going to be, I would say that there's already pressure on him from the Trump administration side, because he wants to lower the interest rate much faster and more deeper than what the Federal Reserve wants. But then at the same time, in his testimony, he will have to balance that, okay, you know what, we thought perhaps we won the war when it came to inflation, but now the recent rebound, the resurgence of that is creating a lot of problem. So how do we balance that, Mr. President? And will the Fed and Jerome Powell will be left alone from President Trump's administration, which we highly think is not going to be the case. So we are looking at a situation where inflation will be going higher on one side, and then on the other side, pressure on the Fed, and meaning that they will have to cut the interest rate unwillingly. That is the key word to look at. But yes, of course, let's see what those numbers are. The expectations are for these numbers to rise up again.
Well, we will be sifting through all of that this week, but thank you so much. We do have to wrap up the conversation there, Naeem. Much appreciate your insights, and we will see you very soon. That was Naeem Aslam, CIO for Zaye Capital Markets, with the economic week ahead.